Yo, what's up, everyone? It's your boy Looney back with another market breakdown. And I'm going to be honest, things are not looking great today. We've even gotten more major news out of China. They've just responded with additional tariffs on US, and it escalates tensions with the US because they just attacked back on the retaliations, doing an executive order of 104% against Chinese goods. So the entire market has been affected by this. And we actually got fake news. I believe it was, I don't know if it was today or yesterday, that they were going to delay tariffs. And then the market absolutely ran. And then as soon as it came out as fake, it shot back. I don't remember if that was today or not. I believe it was yesterday, but today things were looking good. We were looking in the right direction. At least some good support, but we couldn't even get to that after the news. There's just been the market has been red across the board. S&P, NASDAQ, QQQ, very few have been green today. And honestly, the week has been pretty rough, down 14%, month 20%, year to date down 26%. So I'm hoping I don't go under 30K because I feel like that's a mental support, but we'll see how things go. Who knows where we're heading, especially in the short term. Could be anything. My portfolio has been getting hit hard. And now the big question is what's next? There is a chance that we're going to see Fed rates or the Fed to step in and cut some rates pretty soon just because of what's going on. There's been a ton of FOMC chatter lately, and it was expected to hold off until late summer and even quarter four. But now with this kind of market pressure and global slowdown, many believe we could see an emergency rate cut or at least a shift in tone during the upcoming FOMC meeting. And yeah, there's a lot of different stocks with earnings and a lot of stocks just being affected directly by the tariffs. I'm trying my best to invest into stocks that will be able to perform long term, but also not affected by the tariffs as much. So that's why I have Robinhood and SoFi. And let's just get into what I'm actually doing. I'm dollar cost averaging into those long-term plays. I'm also buying crypto. Crypto was doing okay, and then it just fell off a cliff because of the S&P. Crypto is very closely linked to S&P. People used to say it was a hedge, but I would not say it's that. Year to date, I'm almost down 50%. So my crypto portfolio is doing really bad, and I'm just dollar cost averaging, long-term plays, a little bit a day, $3 a day. And I'm also dollar cost averaging everywhere. So even options, I am selling puts and just trying to get acquired shares at very cheap. So when the stocks do decide to run, which I don't know exactly when, but when they do, I will get that stock appreciation and be able to grow my portfolio. So Riot's my big play right now. It is down massively because it's linked to crypto, and I was using it to hedge it. So it's struggling as well. I actually held off from buying any more shares just because I feel like I'm overexposed to it. I have 18% there, and then also Mara, I have a ton of shares. I have 200 shares. So crypto mining and crypto in general is taking up a lot of my portfolio. So I'm holding back on those, and instead I am acquiring shares of SoFi. I currently have 300 shares of SoFi, and I will probably get assigned another 200. I have a few SoFi puts, and I actually go over this in my Discord. Sorry, I'm just going to cut right there before we continue. I have a free Discord for anyone to join, and then I also have a premium Discord with a lot more perks. You get one-on-one coaching, trade alerts, and just overall communication through these rough times with other premium members and giveaways. You can check it out. There'll be more about it in the description, but that's where it is, description. Anyways, back to what I was saying with SoFi. Yeah, I'm hoping to get acquired shares. So there seems like there's two that I have a chance of being acquired. This $11 put, and let's see this other one. Let's see where it is. And the $12, nope, sorry. I have an $8 put, $10.5 put. So 10.5 and the $11, which is pretty good. I mean, that means I'll acquire SoFi for a pretty cheap price. It's at $9.29, and my average cost is $11.26. So I'm hopefully going to be bringing down my cost basis and then selling covered calls, which I'm also doing, trying to get income as we see some downturn. I have 300 shares being my collateral. So I have 3 contracts, and I'm already up 60%, because I actually did it when everything was pumping. I timed it pretty well with that. And then I have actually a naked call, covered call, which I didn't plan to do actually. I didn't realize I had it, but that's the situation with that one. So honestly, hopefully SoFi doesn't go past this, because I'll be in an interesting situation. I think I was able to do it because I have a long-term call. But yeah, I only have 300 shares, but I was able to sell 400 shares, or sell calls on 400 shares. So luckily this one's pretty out of the money, so it's not even close to where it is. I could close it out and buy it, but I'm just going to let it sit there and see how things play out. And then, like I said, there's a few puts. I have more covered calls on other stocks, just collecting income, building my portfolio, just sitting in cash and investing small. And then that long-term call, it's kind of drowning underwater, either going to double down or just sell enough covered calls to cover the cost of it. And then trying to build my position as much as possible, because this major dip is an opportunity. We probably won't see anything like this in a while. So I'm just trying to buy up as much as I can, as frequent as I can. And Sony, I'm trying to get 100 shares. And then once I do that, sell covered calls, and then move on to the next stock, SHED, Schwab, and get those dividends. This one's a high dividend one. And I actually got a $4 dividend. So if I get 100 shares of this, it'll be pretty crazy how much I'll actually get from this. Hood, I am trying to get as much as I can before it runs up, because it won't really be affected by tariffs. It's an online company, but it will be affected by the economy. So whether or not tariffs are affected, the economy does affect a lot of these companies. I actually am invested into Chinese companies, and I probably shouldn't, because if I'm being honest, I don't believe the Chinese companies will outperform the market. They don't usually report truthfully of what the companies are actually doing. So I'm a little hesitant to invest or continue investing in them, but I am holding them. They're kind of my hedge in case that they do go up. So obviously I'm not going all in. I am keeping some cash on the sideline. I have the 800 right there, 860. And in case of any sell-off, major sell-off deepens, but I'm also not sitting completely still. These dips are where long-term wealth is made. And if you're feeling lost or want to trade with me in real time, don't forget to join the Discord community. Until next time, peace.